Welcome back to the ICT or SMC Beginners course. Today is episode 2 and we are covering swing points. We're going to cover what a swing low and a swing high are, and this is going to be definitive or definitions of what these actually are, as well as examples, because I believe that trading should not leave room for interpretation. We want very specific key data points or specific technical signals that tell us what the market is likely to do and where it's likely to go. We're also going to cover the importance of swing points, and finally, what swing points actually tell us and what they hint towards when analyzing and trading the financial markets. So first things first, let's talk about what a swing low and a swing high are by definition. So we're going to start off here on the left side, which is where we have our swing low. And by definition, a swing low simply is a low with a higher low on either side. So if that doesn't spark something in your mind yet, we're going to dive right into that. And if it still isn't making sense, make sure you go back and either rewatch or watch Understanding Candlesticks, which is episode 1. So the first thing here, we should know where our lows of these three candles are. And if we don't, I'm just going to mark out one here with this white line. This is our low. It's the lowest point in this candlestick, and we're going to denominate that with an L. Pretty easy to understand. So we know where our low is. Now we're looking for a higher low on either side, which is right here and right here. And once again, we're going to mark those out with some dotted white lines, and we're going to call those HL for higher low. Now I never do this on my chart, but for the point of educating and teaching, this is how we're going to look at a swing low, with a low that has a higher low on either side, which means as soon as this candlestick closes, and a new candlestick, which isn't on the chart here, but this candlestick where my cursor is, appears, we can confirm that this is in fact a swing low. Until this candlestick here closes and the next one opens up or starts, this is an unconfirmed swing low. Now that we understand that, let's take a look at the swing high here. So by definition, a swing high is a high with a lower high on either side. So just like on this side, let's mark out where our high is. And that's at the top of this wick right here on this big green candle. So this is where our high is, so we're going to mark that out with an H. We're then going to look on either side of this candle where this high is and see if we have a lower high on either side. So we're looking for a lower high on either side of this candle. We have one right here at this high and one right here. So once again, let's mark those out with some dotted white lines and annotate those with LH for lower high. And that means since price moves from left to right, as soon as this candlestick closes right here, and the next candlestick, which hasn't appeared yet but would appear where my cursor is right now, once that candlestick opens and or this candlestick closes, you can confirm this point here as your swing high. So not only is this the high, this point here becomes your swing high, and this point over here becomes your swing low. Okay, so now that we have a basic understanding of what a swing low and swing high are, let's quickly jump into a couple quick examples of these swing lows here, because there are some key things that lots of people get mixed up about, so I'm here to clarify those right now. So taking a look on the right here with this diagram that is currently labeled, this is the example that I showed you right off the bat, and it is still true, where we have a low and a higher low on either sides, and that means by definition it is a swing low. When we take a look at the example to the left of that, which I'm currently circling here, you can see together, let's figure out where this low is. Well, the low is right here. So I'm not going to mark it out with a letter, but I am just going to mark it out with this line here to make it easy to identify. Do we have a higher low on either side? We sure do. This is also a swing low. Even though this is a big wick, this still counts as a swing low. Taking a look on the one to the left here one more time, let's identify where our low is. Right here, right in the middle again here, you can see since swing lows are made up of three candlesticks, this is a swing low right here because we have this low with a higher low on either side, which we can identify with these white dotted lines. And finally, taking a look on the left example here, the furthest left, let's take a look at where our low is. And if you said right here, you're actually wrong. There is no low here because this is lower. This is a low of this candlestick, but it's not a swing low because this low on this candlestick right here is lower than this low. So although this one here is higher than this one, this is actually lower than this candle is, so this is not a swing low. As you can see, it does not fit these parameters, so although this looks similar to this candlestick pattern and this candlestick pattern, it is not by definition a swing low. In order for this to be a swing low, you would have to have a candlestick formed kind of like this over here, at which point you could have this low being higher than this low, and in fact this would become your swing low. But as it sits right now, this is currently not a swing low. And finally, the thing that lots of people get hung up on is the color of the candlestick. This is a bearish candle, so it has to have the swing low. This is also a swing low, even though this candle is green. So don't focus so much on the color of the candle, focus on the lows, because we are searching for a swing low. Okay, so now that we've gone over the swing low example, let's quickly just cover the swing highs here. Now, hopefully you have the idea by now, but if not, this will go by quickly. So you've got this single high here in the middle, and this is our initial example on the left here. So you've got your single high here, which is a swing high because you have a lower high on either side. So we're going to use this as our base example here, and let's move to the right now, where you can see this second example, where we have a single high in the middle, and we do, and that is a valid swing high because we have a swing low, or sorry, we have lower highs on either side, which is denoted by these here. On to the third example here, you can see that we have our single high in the center here, and that is confirmed to be a swing high because we have a lower high on either side. Taking a look at this last example on the right, you can see this is our central high here, and it is actually not a swing high just like last time because we do have a lower high here, but this is actually a higher high. So just to prove that to you, I'll just extend this line to the right, and you can see that this is in fact a higher high than this candle is here. So therefore this is not a swing high. In order for this to be a swing high, this wick here either needs to be lower, or there needs to be a candle on the left here that has a lower high than this candle here. So now that that's understood, let's take a look at some charts to really send this idea home. Okay, so now we're taking a look at ES's weekly chart. This is the S&P 500 futures. So if you're brand new to trading, that probably doesn't mean a whole lot to you, and that's not really important here, so don't stress about that too much. But this is a weekly time frame, so that means that every single candlestick here represents one full week of trading or 1 week of data. So with that being said, let's hop right into marking out these swing highs and swing lows and kind of combining these concepts to figure out what market structure is actually built out of. And we're not going to go too deep into market structure here. That is going to be a future video, probably next video, along with trends, expansions, and things like that. So for lots of you that have marked up a chart or analyzed in the future, this isn't going to be fun or exciting for you, but it is important to understand these definitions because they will all come together in the next couple videos and throughout this course. I promise you, if this isn't making sense to you yet, it will. And you may have to watch these videos once or twice. I don't know. It really depends on the person. But these concepts are all going to merge together and things are just going to start to click here for you. So with that all out of the way, let's first note that we have a swing high right here. So I'm only going to be marking out the swing highs and swing lows. I'm not going to mark out the lower highs and lower lows and things like that to confirm these. We can kind of do that in our head here. So we do see that this high here is higher than both this high and this high, which means that this is a swing high here. We then sell off. Price comes down here over the last couple weeks, and we do create this low here, and this low isn't confirmed as a swing low until this candlestick closes. So as soon as this candlestick closes or this week's data is complete, we can see that we have a higher low on either side of this low here, forming a swing low, ultimately sending price up the next week. We then form this high right here, and once this candlestick closes, we can see we have formed a swing high here because we have a lower high on either side. What does price do from that point? It comes all the way back down here through this swing low point and comes down right here, creating a new swing low. How do we know it's a swing low? Because we have a higher low on either side. So once we do that, price comes up here and then ultimately puts in this swing high right here as well in the same week that confirms this swing low. So we put in this swing high here, which has a lower high on either side, ultimately sending price back down through this swing low, breaking structure again, and forming this swing low here, which we've only known as a swing low because this week here has just closed, confirming that this low has been placed in as a swing low because we now have a lower or a higher low on either side, this low being the lowest, confirming that this is a swing low. So we're not going to talk about breaks in structure and shifts in market structure quite yet. That will be future videos, but I just want you guys to start visualizing what swing highs and swing lows actually look like in the market and how they do form on a real live chart. So I hope you guys found that insightful. Feel free to hop in some charts yourself and try these things out. Try analyzing them. It is easier on higher time frames, but you can definitely do it on 1 minute time frames as well, or anything in between. So with that all being said, if you do have any questions, make sure to let me know in the comments section down below, and I will do my best to answer those. And until next time.